Hey everyone, welcome back to the channel, your number one source for income-oriented investing. And I wanted to make a quick impromptu video here because I've been getting a lot of emails and messages and comments about how can us income investors invest in Europe, right? So what are the covered call ETFs or the income-oriented ETFs to invest in Europe or outside of North America now that there's a lot of volatility in the US market. Well, it's starting to recover now, but you guys know the drill, or you know what I'm trying to say, right? How could I invest in Europe? So I'll go through the ETFs here. We'll go through them. There's just two quick things I want to tell you about. Number one, keep messaging me, keep emailing me if ever you want or you're requesting information or content, because if I get a lot of emails along the same lines, I will create the content because I'm here for you guys. It's my pleasure to create the content or to help you with the stuff you want to see. That's number one. I might not respond to everyone, but I try to read everything. Number two, something you need to be aware of. Okay, very important, especially if you are a newer DIY investor. One of the things I've learned throughout my investing journey is that one of the most dangerous things that could really mess with investors is short-term trends. What do I mean by that? Well, this is actually a perfect short-term trend that's actually going on. This is why you guys have been messaging me. It's probably because you've been seeing articles and seeing people talk about it on the news. How could I, maybe get some access to European stocks, which are kind of doing in the last month or 3 months or 6 months doing better or beating the S&P 500 or beating US stocks. So just be aware that short-term trends can be dangerous because we're not short-term traders. We're long-term investors. You always have to remember to keep a long-term mindset about everything, right? So whether it's this trend right now, whether it's stocks might go down and stocks are experiencing volatility, let's go to bonds, let's go to gold, whatever the short-term trend is, I think you guys know what I'm talking about. It could be very dangerous. You always should ask yourself, do I really need to switch my portfolio or to sell at a loss to go in something else like Europe, for example, just because I'm seeing it as a trend on the news? This could be very dangerous. Remember, always have long-term thinking and always ask yourself the million-dollar question that I always ask myself now. When you're investing in something, whatever the thing is, over the long term, do you think it's going to beat the S&P 500? Right? Do you think the European stocks and emerging stocks are going to beat the S&P 500 over time? I'm not talking about the next 3 months, 6 months, guys. I'm talking about over the long term. I don't think so. That's just my opinion. Maybe I'm wrong. I'm not saying there's anything wrong with diversifying outside the S&P 500. That's completely fine. I'll give you and show you the options. But my point is just watch out for these short-term trends because they can make you do things maybe impulsively with your portfolio that you might regret later down the line. So that's all I will say about that. So let's get into how, as income investors, and I guess we'll cover the index growth as well, how you could get access to European stocks. So one of the most popular and easiest ways, just like the S&P for the US, the TSX 60, for Canada, well, for Europe, you have the MSCI EAFE index. It's a very popular index that's not specifically only in Europe, but basically this index, you should all know it by heart, focuses on developed countries, not emerging markets, developed countries outside North America. So the E stands for Europe, the A typically stands for Australia or Australasia, which is, I believe, Australia and New Zealand. And then the FE is Far East, which is basically Hong Kong, but mostly Japan, right? So IEFA is the stock symbol for the iShares or BlackRock Index Growth ETF on the US stock market. If we look at holdings, for example, it has a lot of companies, hundreds and hundreds of companies. But what I really want to show you is the geography breakdown. You'll see there's a big chunk in Japan, big chunk in all over Europe, right? United Kingdom, France, Germany, Switzerland, Netherlands, Sweden, Italy, Spain, Denmark, a lot, Belgium, Finland. So a lot of Europe as well. There's also some Hong Kong, Australia, Germany. So it's not specifically for Europe, but it's definitely developed countries outside of North America which has a big chunk in Europe, big chunk in Japan and Australia as well. So for us Canadian investors, if you want something Canadian listed, you don't want this because it's US listed. Global X Canada has the equivalent listed, so you could buy it in Canadian dollars. EAFX, as you could see here, same exact index. Now for the covered calls for the income investing, right, which is what this channel is all about, you literally have that same index with covered calls. So you have EACC, which does covered calls on that index, which we just explored together. And then you have EACL, which is the leverage version. So this has about 8% yield monthly distributions. This has about 10% yield right now, monthly distribution. So these are great options if you want some Europe, but maybe you want a little bit more diversification than just Europe. These are great options. And a reminder that this ETF is in the all-in-one covered called EQCL, right? So EQCC, the non-leverage version, EQCL, the leverage version. This is just give me the best stocks all over the world. So of course, if you go to holdings, 33% is going to be outside of North America, and a big chunk includes that index ETF. Sorry, I think my face is probably blocking. Let me lift it up here. You could see that that specific covered call ETF, EACC, is 32%. This is 32% on 125% because this is leverage, but it's a big chunk of this ETF. So just wanted to point that out, that in case you want some, but you don't want specific, you could go with EQCL. It has the whole world, including the S&P 500, including Canada, etc. But if you really want a little bit more specific, not super specific to Europe, but Europe, etc., you have EACC, EACL if you want the covered call version. Now moving on to specific Europe exposure, you have the Brompton European Dividend Growth ETF. The stock symbol is EDGF. The yield 6%. We know that Brompton, doesn't do as much covered calls. They're more into growth and total returns. You have EDGF. This is another option. This is specifically for Europe, guys. Okay, that's the main difference. It has only Europe. It doesn't have Australia and Japan. So this is really if you want specific Europe. And another thing, you see the breakdown here. I know it's small, but it's mostly financials, industrials, and healthcare, consumer staples, and really the big economies in Europe. Germany, France, Great Britain are the top four. But another thing, just like the name says, this focuses on only the dividend stocks in Europe. So these are in Europe only and dividend stocks only. So here's another option. And don't forget that in their all-in-one BMAX, which I really like, that ETF, EDGF, yeah, makes up 10% of BMAX. So it's in BMAX already. Just wanted to point it out. Another option for specifically just Europe, this is very similar to the Brompton one, is ZWP. This is from BMO. Covered call ETF, about just under 7% yield as of April 22nd. I don't know what the yield is now, but I'm filming this on April 23rd, by the way. This is another one, and it's very similar because it's Europe only and it's dividend stocks only, right? High dividend with covered calls. So, and it's in their all-in-one as well. So ZWQT, which is the BMO all-in-one, ZWP, the Europe one that we just saw, this one here, makes up 13%. So it's already in there. Just wanted to point it out. So for your Europe specific, you have ZWP, you have EDGF. You also have EBNK, which focuses just on European banks from Evolve. This is a very high yield of about 12, 13 or something like that. And it only, like the name says, it only focuses on financials, but all over Europe, which is pretty cool. You have the portfolio here, the banks here. You could check it out. So financial specific, but Europe specific. No leverage here, but you have covered calls on up to 33% of the portfolio. That's another option. So these are really the options for us Canadian investors, Canadian listed options. On the US side, besides obviously IEFA, I really haven't seen much income focused or covered calls on Europe stocks. I could only think of GIAX, which is global, which does it on a bunch of global indexes and stuff like that. It's still mostly US, but there is a little bit of Europe and emerging markets here. I just wanted to point that out. It's really one of the only ones I found. There's Argentina in here Israel. You see this, here's Europe, small percentage, but hey, it gives you at least a taste of Europe and really the whole world. So this is an option, I guess, for US, my American friends watching, and you want covered calls, you want income related one. As far as I know, this is the only one. If you guys know of another one, please let me know. Leave it in the comment section below. But here are some options if you want to get into Europe. Again, guys, remember, be careful of those short-term trends. Ask yourself, are you investing or going to Europe, especially if you're deciding to sell at a loss to go into these? Are you doing it just because it's a trend? You got to think long-term. Ask yourself, as a long-term investor, is it really necessary? If it makes you feel better, go for it. There's never anything wrong with making yourself feel better as an investor, sleeping better at night, and diversifying. But will these beat the S&P 500 over the next 5-10 years? Not in the next 6 months, in the next 5-10 years. Remember, we're long-term investors. So I just got to put that disclaimer out there. So hope this video was good. Hit that thumbs up button, guys. Hit that like button. It really helps. I would really, really appreciate it. And stay tuned for more content coming up. Take care. See you next time.